I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Yes, we are live. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Did you know it's the best morning show in finance? I am Spencer Israel, joined, as always, by JC Parets. And missing Steve Strazza. Steve Strazza was supposed to be on his way home right now, on his way home to rejoin the show that he's the co-host of. But unfortunately, his flight was canceled. Didn't know they could do that. So he'll be back, I guess, in a couple of days. I don't even know, honestly. They're staying in Japan, so good for them, I guess. All right, we got a lot going on today, a lot to get to. We have earnings, of course. We have the Fed. Don't worry about the Fed. We're not going to talk about that too much right now. We're going to save the Fed discussion for John Netto at 9:30. He's going to preview not so much what the Fed's going to do or what they might say, but how he's going to trade the meeting at 2 or the announcement at 2 o'clock today. That's the important part. How do we trade it? So that'll be at 9:30. Howard Lindzon will be on the show at 9. Kimmy Sokoloff at 9:15. And that's the rundown. You know the drill. Smash the like. Ryan Heath loves the straight, no-filter tech talk. Thank you, Ryan. Appreciate that. Drop us a thumbs up. Let's go. All right, JC.
Mr. Israel.
How was your golf yesterday? Let's get it out of the way.
It was non-existent. I played 2.5 holes, and then the alarms went off where everybody has to come back to the clubhouse and start drinking. And which is a good reminder as to why I don't drink hard alcohol during the day, dude. I had the worst heartburn at night. It was terrible. It's terrible. Wait. No hard alcohol during the day. No.
Why 2.5 holes in the rain?
Yeah, I mean, it wasn't even raining yet. I guess there was lightning, so the alarms go off, and we pretended like it wasn't happening. Like we were on the third hole, we were playing great, having a good time, talking about how nice of a day it was, as a matter of fact. And then the alarms went off. I'm like, I'm gonna hit it anyway. Boom, right in the drink. And we're like, all right. Speaking of drink, let's go inside and have a beverage, and that was it. So 2.5 holes. Not terrible.
2.5 holes. Though. So the question is,
8 to 7, I think.
Did you break 100?
Yeah, I was 15 strokes through 2 holes. So
all right.
all right.
Getting somewhere. All right. A lot going on here. What do you want to talk about today? You want to talk about gold?
I think we should talk about the market. This is the best morning show in finance. So nobody cares about JC's shitty golf game. Man, I'm a terrible golfer. I'm an embarrassment to the sport of golf. They should kick me out of the country club for sucking so bad.
Well, let's talk about gold.
All right. First of all, before we get into the gold, the fact that the boys are stuck in Tokyo, oh yeah, that's believable. I mean, listen, if I had to be stuck in any country, that's where I'd want to be stuck in. So I just wanted to put that out there. We'll get the deets when they get back, but yeah, how convenient, Spencer? How convenient.
Lord only knows when that's even going to be at this point. But
listen, this is an interesting situation that we have on our hands right now with this precious metals. Why don't we take a look at this chart? It tells a really interesting story. For those you youngsters, Spencer, take a seat, right? And we're gonna give you some religion here. Share what happened when you were in your 5th grade prom. Throughout the 2000s, gold was absolutely ripping, and assets in strong uptrends don't just tend to do well on an absolute basis. They tend to outperform their alternatives as well. Do I have the right? Okay, perfect. They tend to outperform their alternatives as well. And that's what you saw from the 2000s through 2011. You see the gold line going up and the black line going up. The gold line going up is gold prices exploding higher, going from 250 or so up towards 2000, close to a 10x return, monster move. I was a gold bug, right? That's why I'm allowed to make fun of gold bugs, because I was one of them, right? I was there. So I paid my dues. It was cool being a gold bug. Like, you know how like now if you're a gold bug, like you're just a loser. Like you suck at life if you've been a gold bug over the last 10 years, right? But it wasn't always like that, Spencer. It wasn't always like that in the 2000s. It was actually very cool. And also remember that throughout most of the 2000s, we were in a raging bull market from 2003 to 2007. Stocks were doing fantastic. So just because gold prices are doing well, just because gold prices are outperforming, doesn't mean that's bad for the stock market. So I just kind of wanted to clarify that. I know a lot of investors out there, may not have traded or invested throughout that period. Obviously, some of you have, and you remember it was cool being a gold bug. It was like crazy parties, like, Vancouver was going wild. The ski resorts out in Whistler, like everyone's, raging, man, like techno music in the middle of the day, like champagne popping. It was cool to be a gold bug. And then what happened? You like that reference? You like that? You like that, Spencer?
Stupid.
No,
reference.
and then
stupid reference, but I get it.
So funny thing happened. Gold stopped going up. And not only did gold stop going up, but look at the massive underperformance. That's that black line right there. So while gold was doing well on an absolute basis, outperforming the S&P 500, it's really been the exact opposite over the last 10, 12 years or so, as the S&P 500 has continued to soar higher, new all-time record highs all the time. America, best place to be invested. Gold, arguably the worst place to be invested, has really made zero progress over the last 12 years. I mean, everybody was making money over the last decade. You could have bought bonds, you could have bought stocks, you could have bought cryptocurrencies. I mean, everybody's making money except the gold bugs, right? So it's the exact opposite of a good time. It's really been torture for all these people. And then the funniest thing, they've been telling us forever how this is an inflation hedge. I guess you have to be really bad at math to think it's an inflation hedge. Maybe it's a hedge against profitability, if anything. But nevertheless, you finally get that big inflation print last year. And what happens? Gold prices go down. Like, oh my God. They finally get what they've been waiting for all this time. And gold can't even go up. So it's just hilarious that we don't necessarily want to be listening to narratives or fairy tales about inflation hedges or anything like that. We want to focus on what is actually happening. So with that being said, it's like, well, JC, then when is the time to buy gold? Because this whole thing of like, oh, you always want to have 5% of your portfolio in gold. That's the dumbest shit I've ever heard. And I've heard a lot of dumb things, especially coming out of your mouth, Spencer. But that one might have to take the cake. Always own some gold. That's stupid. There's a time to own gold. There's a time to not own gold. There's a time to be shorting gold, right? There's a time and a place for everything. Same with stocks, same with bonds, same with energy, same with tech stocks, right? There's a time and a place for everything. And it's up to us as investors to first identify what type of market environment we're in. First, identify the type of market environment we're in, and then decide which tools and strategies are best for that type of environment. So like right now, for example, if you have like trades that you're putting on and strategies that you're incorporating that are great for high volatility environments, you're doing terribly, right? Because we're not in a high volatility environment. Why on earth would you be incorporating strategies that are good for high volatility environments? You want to be incorporating strategies that are good for low volatility environments, because that just happens to be the market environment we're in. If you've been long gold and not stocks, you've been underperforming, because we're just not in an environment where gold is outperforming stocks. Now let's take a look at gold on an absolute basis. Let's take stocks out of the equation for a hot second, because what I'm seeing here, Spencer, shout out to the late great William O'Neill, rest in peace, Mr. Cup and handle kind of guy. I mean, listen, I'm not an expert when it comes to naming of price patterns, but a cup and handle, for the record, is not a reversal pattern. A lot of people see these massive bases and they think it's a cup and handle. No. A cup and handle is a continuation pattern, right? So this is a massive base followed by a smaller base, the handle of the cup, if you will, and then you get the breakout in the direction of the underlying trend, which in the prior decade was up. So the resolution out of this, in my opinion, should be higher eventually. When is that going to happen? I don't know, Spencer, but I will tell you this. This Alamos Gold AGI, because it's all right. It's like, all right, JC, we get it. Gold this, precious metals that. But what are we going to do about it? And I think what we're going to do about it, I got a fun one here. Alamos Gold, Spencer, not from Vancouver. Not from Vancouver. This one is in Toronto, still Canadian, right? So we know it's legit, right? So still Canadian, not from Vancouver, actually on the East Coast. Shout out Toronto. I love Toronto for the record. Toronto,
Me too.
Vancouver. I haven't decided which I like more because I do like going to Blue Jays games, and you can't do that in Vancouver, but you can go skiing outside of Vancouver. You can't do that in Toronto, so I'm torn. Alamos Gold, East Coast gold miner, right? How many of these gold miners do you know making 10-year highs, Spencer? Can you name any?
No. I only know like 3, like the biggest 3, and they've all consolidated anyway.
Right.
So
And maybe making 10-year lows, perhaps, but 10-year highs, hard to find. So I'm a big fan of relative strength. I don't know if you heard. It's kind of a thing. 10 and a half, $11. If we're above that, I think you can own this sucker all day. I think it's heading up towards 20. And let me tell you something. With the relative strength that we're seeing in Alamos, I haven't done the relative strength. I don't have the relative strength line here, but I'm pretty sure it's making new highs considering what the rest of the group is doing. I got to tell you, the relative strength here really, really stands out. And if this is a commodity super cycle, which I have a funny feeling we could be in the early stages of, I think gold's going to do well. Although gold isn't, you could argue it's not even a commodity. You can argue maybe it's more of a currency. Nevertheless, kind of that group of stuff. Take a look at the intermarket chart here. Strazza says this is his favorite chart right now. Very aggressive, Strazza. Maybe he was just losing his mind, maybe because he was stuck on a plane for 4.5 hours, or maybe this is his favorite chart. I don't know, but I think it's one that tells an interesting story. I'd rather listen to stories from charts versus journalists, right? Because this is actually for real. It's not like fairy tales that are being written about. Like, this is real life. So here we're looking at what? Bonds in green, stocks in blue, commodities in yellow or orange, mustard-ish.
Why call it gold? I don't know.
I'm gonna go with mustard, maybe like a spicy brown mustard there. So all right, so we got the bonds peaking in 2020, as you can see there. Then you got the stock market peaking in late 21, and then you got commodities peaking last year, right? So BSC. That's the way I learned it, Spencer. Back 20-something years ago when I learned there were 3 asset classes: stocks, bonds, commodities. And the way I remember that was BSC. And that's the way the cycle goes. And that was the old ticker symbol for Bear Stearns. So that was the way I remembered it. Kids these days, they forgot all about commodities. It's like they don't even exist. It's all stocks and bonds with the kids these days. And there's 60-40 portfolios and whatnot. Silliness. There's a third, and that's commodities. And then what happened? You got that bottom in the stock market, right? You got the bottom in the bond market. Have we gotten the bottom in the commodities market? I think so, maybe. I think so. We talked about energy. We talked about adding to energy positions this week. I did that. So far, I'm being rewarded for adding to positions. I've added to my energy positions twice in the last week or so, right? Week and a half or so.
Mm-hmm.
And, again, only losers average down losers. So imagine like if you were one of these losers that have been averaging down in precious metals this whole time, instead of buying the stocks and the things that have been working, like that's terrible. That's no way to go through life. So we want to be adding to winning positions. And the fact that we're already being rewarded for those winning positions. I'm not saying energy, this is going to be the best trade of my life and energy is going to go to the moon. But it's a pretty good sign. Historically, it's a pretty good sign. And why don't you go with that and we'll finish up with the Dow. 12 straight days, right? Shout out Mike Zaccardi yesterday talking about TB12. 12 straight days for the Dow Jones Industrial Average. And I think Ryan Dietrich, if I'm not mistaken, came out with an interesting stat that the market's never been down 12 months later, something like that. Do I have that right?
Wait a minute. You said you hated that.
I hated what?
Those types of stats.
No. You're missing the point. You're not listening. You're not thinking fourth dimensionally, Spencer.
Oh man. Okay.
It's not so much the data mining of like, oh, the last time that the Dow did this on a full moon on a Tuesday with the Fed doing this.
I don't like that either.
Right. That's not what I'm talking about. I am talking very specifically about a relentless bid in a market. This is a rate of change thrust, a momentum thrust, consecutive up days. This is just evidence of relentless buying pressure. And there's different ways to gauge this. This is one of them. Historically speaking, we see this sort of behavior early in cycles, not at the end. So when people were like, oh, this is a blow off top or whatever, the evidence is actually suggesting that it's the complete opposite of a blow off top, right? And that's why it matters to me. How did I do explaining the difference? Did I explain the difference okay?
Yeah, I guess you do like knowing sometimes what has happened after 6 months, 12 months out after some other event. Is my takeaway. But yeah, evidence of a relentless bid is usually a good thing that we want to see, right? So
well, you want to see it if you own stocks, right? If you don't own stocks, it's probably if you're short stocks, you don't want to see that.
It's true. So
it just depends. I look at something like this and I'm like, it just kind of reiterates a lot of the other things that we're seeing, right? So it's not like this like massive, like, oh my God, the Dow's up 12 days in a row. Let me play with my stupid computer to tell me what that has meant historically. Like it's not that. It's, hey, Dow's up 12 days in a row. Maybe it's 11, maybe it's 13, maybe it's 10, maybe it's 20. It doesn't really matter the number of days. What matters is, are we or are we not getting a relentless, sustained period of a bid in the Dow Jones Industrial Average and stocks in general? And the answer is a big fat yes. And historically speaking, does that happen near the end of cycles or near the beginning of cycles? Historically, that happens closer to the beginning of cycles. So that's really what that means to me. And that's good enough. And it's not like I'm going to go do anything different. It's like, oh, the Dow is suggesting that there's a strong bid for stocks. It's like, well, yeah, we knew that. So, all right, moving right along. Turn the page, right?
How about this? This is a great table, by the way. It's only 7 stocks, JC, driving the Dow up. The top 7 at plus 3M.
Yeah.
Yeah.
Are you being sarcastic or?
I mean, yes and no.
Yeah, I mean, listen, we know it's not 7 stocks. Like any of these, like I don't know if you're trying to get me going, but any of these like schmucks that actually thought it was only 7 stocks, like you got to
no. 7 stocks within the Dow is what I'm saying.
No. I know what you're saying, but yeah. I'm reiterating that anybody this entire time that told you it was only 7 stocks going up, like there's stupid magnificent 7. I don't know what idiot made that up. It's the dumbest thing I've ever heard. It's not 7 stocks, and anybody who suggested that is proving to us that they just never took the time to go and look for themselves. We've known this whole time it was not 7 stocks. In fact, those 7 stocks are actually underperforming a lot of other large caps. So if it's 7 stocks, it ain't those 7.
In the Dow, it's these 7. I guess 8 if you, yeah. But is it a coincidence that the top 1, 2, 3, 4, top 6 largest weightings in the Dow are up the most? Of course not. Right? Of course not a coincidence.
Well, first of all, this data only goes back a few weeks. So, I mean,
yeah, but that's what we're talking about, the last few weeks.
Yeah. Well, if you're talking about the Dow being up so much, look at the one all the way at the top. That's UNH. That's the largest component. UNH represents 10% of the Dow Jones Industrial Average. I don't know if you knew that.
Yeah.
Israel.
Yeah. And it's up the most. Therefore, of course the Dow is going to be up.
The Dow's going to have a hard time going down if its largest component is absolutely ripping and doing better than the others. I mean, it's just it's just math. Most people hate math, I've learned.
Right, but I'm looking at this table. It's a very clear story of the haves and the have-nots, even just within the Dow. Right, the index itself is
how is it the have-nots? Like the worst performers down, like other than American Express, the worst performers down like 1%, 2%.
I mean, there's a big difference between being up 5% and being flat, I think, right? So, especially over the course of 2 weeks.
I know, but McDonald's was the biggest winner for a long time. Now it's down 1.6% in this arbitrary 2-week period. Like, I wouldn't overthink this.
Okay, fair enough.
Yeah, I wouldn't overthink this.
All right. Wait, I wanted to go back because you had mentioned it, and we had the charts, which was the energy, right? So that's what we were talking about before. So we had a couple. We had this, and we had the Chevron chart.
Yeah, Ian Culley thinks that this is the most important chart of the second half. I don't disagree. I mean, I would even throw in maybe industrials relative to tech. It's mostly like the rotation out of growth and out of tech that we've seen this year. Are we going to get it? I think we do. I really, really think we do. And that's pointing to higher interest rates there, Spencer, which is really interesting because the large speculators are betting very, very aggressively that interest rates are going up. And I don't really like to trade alongside those guys. I like to usually take the other side. So we're definitely getting mixed signals from an intermarket perspective versus sentiment. It's very, very interesting, which is probably why I don't really have a position in that trade, in that thesis, because I really don't know. Like, I don't have a bond position. I'm not trading like a growth value relationship. Like, I don't have that at all. My portfolio is definitely leaning more towards cyclicals and not tech and growth and everything like that. So I guess indirectly, right? I don't have any crypto anymore. I don't have any Bitcoin. I got rid of that a couple of weeks ago. So I'm not leaning towards the lower rates, which is interesting. And, I'm kind of saying this out loud for the first time. I'm kind of thinking through it. The things I own and don't own. What do I own? I own financials. I own industrials. I own energy and a tiny little bit of tech. I mean, that's what I got. So I guess I am betting on higher rates, I suppose, indirectly. I guess I'm okay with that.
Yeah, market betting on lower rates just via a bit of a stair-step approach here. They're thinking, a quarter point down, a quarter point up today, and then a quarter point down every meeting beginning, next spring, call it, right? So that's what the market is currently pricing in. Obviously, we'll find out a lot more about that today. Maybe we won't. I don't know. But we'll have Netto on in about 40 minutes or so.
Yeah, curious to see what Netto thinks
to help us analyze that, because Lord knows you and I are not the Fed speak experts on.
Thank God. Good for him. I'm glad we have a guy like him on our team. Because,
me too.
I don't want to be that guy.
I actually maybe not low key. I despise like going into those statements and looking at the word choice changes and what's different and what's not, and they took out that sentence and they replaced it with this sentence. Like, oh man, I don't.
It's terrible.
I don't like it. I don't enjoy it. All right, you want to do a couple earnings here real fast?
Hell yeah.
Yeah, because we got some doozies last night. Let's do that.
Ooh.
All right, Google. Actually, before we go with the numbers on Google or Alphabet, whatever you want to call it, do you want to guess how many times AI was mentioned on the conference call last night? I'll tell you anyway. 66 mentions of AI on the conference call last night. Google's numbers, there they are, top of the chart. Beat on the EPS, beat on the revenue. Man, they just keep on growing. Cloud revenue came in above estimates. YouTube ad revenue came in above estimates, and those are the two most important parts of their business. Yeah, I mean, this company, it feels like every single quarter they deliver a beat. It seems like, certainly. And there you see, up 6% this morning.
Up 6% on $1.5 trillion. So we're talking.
Yeah, it's a lot of money.
$90 billion in market cap overnight.
Yeah.
Not bad. Not too shabby. Not too shabby.
That'll do it.
$90 billion in market cap overnight. And these people are worried about $1 billion bank disappearing. Are you kidding me? Who cares?
Yeah, I don't think anyone's worried about that right now. But yeah, Google can't stop, won't stop. Microsoft was. Oh wait, where's the Microsoft chart? There it is. Microsoft, a little bit cooler reaction from the street. The numbers were good. I mean, the headline numbers were good, right? EPS beat, sales beat, but they did talk a lot about their spending with regards to AI and how that's going to eat into, obviously, their margins and their profitability a little bit going forward. And they also said that their AI, revenue from AI is going to be not like an all at once thing, kind of like what NVIDIA just said. It's gonna be a slow trickle, not like an avalanche. I think they kind of downplayed that. Perhaps that's why the stock is down this morning. But anyway, it was still a good report. It was still a good quarter. I mean, they're crushing it. Their cloud unit Azure is every single quarter that it seems like they have double-digit revenue growth, revenue and user growth. It seems like every single time. So, not a bad quarter by any means. I think this reaction is more so just because they lower the bar for themselves. You have thoughts on the chart?
Nothing's really changed. We're still battling with those former highs from late 2021. So if we're below 350, which we currently are, there's not really anything to do there. I want to see them stick that landing. Haven't been able to do that, which makes sense. This is the first attempt to break out above those all-time highs, right? Apple was actually able to do it, and Apple's actually been able to stick that landing so far, which is very impressive. Microsoft has not been able to do that. Fun fact, there, Spencer Israel, Microsoft, 2.6 trillion in market cap. It's not nothing. Google's only 1.5 only.
Oh wait, investing heavy says Azure missed expectations. Maybe I was confused because there's like multiple Azures, right? There's the Azure, and then there's like the what's it called? It's like a different.
What's Azure? What is that?
That's their cloud. Yeah, that's their cloud business. There's Azure and there's Azure Arc, right? So yeah, Azure Arc is I guess a smaller part of the overall cloud business, and that is what I had seen as having a 150% year-over-year.
Or maybe it's just stuck below overhead supply and demand still trying to absorb that and take some time. Maybe that.
Yeah, the bottom line is like every company under the sun is paying to advertise on Google. Or for Microsoft's cloud, like one or the other, like your Microsoft's cloud or Google's advertising. It's pretty much you have to at this point. So yeah, the big get bigger, the rich get richer. What else do we have? Let's look at Visa here. In the light of the American Express report from the other day, and also we have MasterCard tomorrow, Visa's top line beat, bottom line beat. I did not look too closely into this report, so I really don't know what else it said other than the headline, but it is down this morning.
Again, like Microsoft, still battling those former highs from late 21. No big deal. It takes time. It's close. MasterCard too, still battling those former highs. Let it do that. Let it dance, Spencer. Let it dance. Are you a good dancer? I can see you breaking it down.
No.
See, you strike me as a good dancer.
No. I would love to say that I am, but I am not. I'm probably
still in a wedding. No, you're not the guy going nuts in the wedding in the middle of the circle.
I would love to be that guy. I think that guy has more fun in life in general. But that guy is not me. What about Snapchat here? This is sort of your disaster stock of the day. The EPS came in a little bit light. The revenue did beat, but their revenue actually declined. It fell 4% on a year-over-year basis, even though their user growth relatively stable. And they talked a little bit about how they're starting to charge more users for their subscription product. But a 4% revenue decline year-over-year, not what you want to see. The stock, I don't even know if it's still down 17%. It might be down.
Oh, it's down 17.5%. If you're
right.
splitting hairs.
All right. Well, there you go. So this is your disaster of the day. They're having problems, as you can see, and the revenue is.
What year is this? Seriously, Snapchat? Who uses this?
I actually I got off Snapchat. I don't know, maybe a year and a half ago, 2 years ago. I just was like, Snapchat was great, like in college. For me, college was 13 years ago. I just wasn't using it.
Let me tell you how the kids do it, Spencer. You don't know. The way I talk to the kids, I get the lowdown on what's happening. And my understanding is up until a few years ago, it was how the kids communicated to meet a girl, you kind of get to know each other and things like that. And these days, kids aren't using that anymore. So this is what I'm hearing, Spencer.
I too have sources of that in that demographic, and I think the kids do still use it, but they use TikTok and Instagram way more, right? So
There you go. That's a good point.
I think that's just what
we
it
have
comes
our
down to.
sources. Look at that. Look at us old men over here. You know, we know what's going on. You're right.
Yeah.
You're right.
Yeah. I think like, and also I don't think like it's not like at least Facebook has the parents, right? I don't think our parents aren't on Snapchat, right? I think it's
no, they don't.
So
have,
so Facebook has the monopoly.
They never were on the
Right,
Snap.
right. So Facebook's got the monopoly on like the call it 15 older crowd, right? Instagram and TikTok are duking it out for like the 35 and under crowd.
Probably lower than that, bro.
30, maybe 30 and under. 20, I don't know. Where does that leave?
You just want to include yourself in the young category? Is that why you're going so high, so that you could be like, oh, I'm still in that young category?
Maybe. Where does that leave Snapchat? Not quite sure, but it is.
It's a zero. Market zero, Smokey.
I don't know if it's a zero, but it's definitely not one I want to look at favorably. What about
you're entering a world of pain. Market zero.
What about Boeing here? Man, this company they're still not making money on a quarterly EPS basis. Holy cow. I thought they would have recovered by now. But anyway, EPS beat by 2 cents. Sales came in a little, actually not a little, a lot higher. Wow, $3 billion above the estimate. Okay, that's something.
Is it?
Yes.
All right.
Do you have thoughts on that?
My thoughts on that are take a look at slide 1 quick and then come back to this one.
Okay.
This is what I'm seeing from just from when I look at an individual, like at a stock, and I want to know the industry and how the industry is doing. And this is what Boeing is the second largest component of the aerospace and defense index, represents 17%. For those of you wondering why the aerospace and defense index has yet to break out, I show you Exhibit A. Boeing. BA, throw that up there. Right now, it is down pre-market. Sorry, it's up 3% pre-market, up towards 221. Throw the Boeing chart up there quick. 221 still has some work to do, but it's looking promising. And if Boeing gets going, what do you think is going to happen to that index? And industrials in general have just, a lot of these construction and engineering stocks. I think ultimately it's a situation where the aerospace and defense gets rotated into, 215, 216. That's what I'm watching, and we're holding above that, Spencer. This is the 61.8% retracement of the entire decline that we got over the last few years. Monster decline. Boeing lost, 60-70% or something like that?
Yeah.
So I think a retest of those former highs up towards 278, 280. I think it's in the cards. We got a solid breakout here. We stick this landing, Spencer. If Boeing's above 215, 216, I think you can own it. It's below that things are messy, as we've seen all year long. Boeing has just done nothing all year. So from this volatility contraction tends to come expansion. And it's attempting to do so to the upside, and it's in the right sector in the industrial space. So I think we should expect upside breakouts here and react to downside breakouts when we see those. We're just not seeing those downside breakouts. We're seeing them to the upside.
One of the very few stocks that did not make highs in the 2021 period because they had their own stuff going on. All right, let's bring on today's guest, Howard Lindzon. He is here. He is backstage, and he is ready. You ready? You're ready.
Are we ever ready for Lindzon? Seriously.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Lindzon.
Can you hear us?
What's up, boys?
Oh, nothing, Lindzon. Nothing. Just your old run-of-the-mill bull market. No big deal. Month 14 of this bull market. How's it treating you so far?
I'm so old, it doesn't matter.
All right. Well, see you later.
What's going on?
Nothing. You tell me. I mean, listen, I spent all day talking about what I'm buying. I spent all day talking about what I'm doing. What are you doing here? What are you buying? Commodities?
Yeah, we have our little show that we do. I added recently a little more Google. Down below 220, it's or 120. It's like didn't blow up yesterday. I think they mentioned AI in their conference call 1,000 times.
66, if I recall.
66 times. I feel like if they can't figure this out, they deserve to die. But I
Didn't
mean,
they say that they're an AI first company for 10 years already?
yeah. I mean, I've been doing my emails to Phil by AI for like 4 years on Gmail. Even if they don't make sense, he's a test case. I've been helping Google with answers.
Got it.
So I don't know. I like the markets over the private markets right now. You know, for 15 years, I like the private markets over the public markets. But as I've been saying, with rates at 7%, or sorry, mortgage rates at 7%, when you can get 6% on your cash, you got it. And with a straight face, you're doing bad. 10-year lockup seed stage deals. You're not doing your LPs any favors like you were when interest rates were at 0. So I kind of, have been dragged back into checking out public companies. The market's been fun, right? Like it's punishing the companies that aren't executing, and the sector rotations have been fun, just bringing back old memories. And yeah, I was sending you notes yesterday. The commodities, steel's at all-time highs. I mean, I don't have a clue how the industry works. Boeing, unless it crashes another plane, like you said, from this, contraction will come expansion, and it looks like it would be higher because it's one of 2 companies in the industry, and if there really is an expansion, Boeing's going to get some orders.
What does it tell you? What does it tell you about the market when Howard Lindzon's here talking to me about industrial stocks and steel stocks? Like what planet do we live on here? For those of you who don't know Howard Lindzon, lucky you, first of all. Second of all, Howard, focuses on technologies, an angel investor. Very, very high growth, way out on the duration curve. So when he's sitting here telling me about industrial stocks and steel stocks, it's like, wait, what? Right?
Well, the other thing that you have going on in the economy right now, we're trying to finish this. We're like 90% done a renovation in the house. You can't get a fridge, you can't get a range. So like the supply chains are still messed up. Like people still want stuff, and there are still little things in the economy that aren't working. But I think the biggest thing coming, JC, is, for 3 years, I mean, one of the biggest cash things coming in the industry is, for 3 years, students didn't have to pay back their loans. So they took their money, they YOLO'd it, they gambled it, they degened it. They spent it. They overpaid for homes. They took that $1,000 to $1,500. If they were married, they took that $1,000, $1,500 a month that they were saving, and they stretched on a home. Maybe they just thought. So I think there's going to be something out there, and I don't think inflation. If you're very wealthy, inflation does not affect you because you're in the experience game anyways. You're not collecting things. You're going to collect experience.
If you're wealthy, you own the things that are going up in price, right? If you're
not just that, so you don't fly first class, right? Like the inflation that you feel, you can suffer for 8 hours, or you can get a smaller hotel room, or you don't care. But Europe is cheap. Traveling east, Asia's cheap. Latin America is cheap. So I don't know what the fall brings, but the banks are acting like there won't be a problem. So, I think you said it yesterday, or I wrote yesterday that European banks, like the world's not ending if European banks are even doing well. And so it's a good time to be like thinking about the next 5-10 years and how to position your capital. But yeah, you got the 14, about 12 months ago. I remember you saying get long, it's a bull market. And I think for a lot of people that didn't, they're really struggling now with the Q's up 35% from the lows to get themselves back engaged. So I think there's kind of like this paradox going on where the people that, like yourself, that just were price and doing the work and getting long in October and November, it's a lot easier mentally than people looking at stuff today with interest rates at 6%, everything, 30, 50, 100% off their lows. I think a lot of people are struggling with that.
Yeah, which is a good thing, right? It's fantastic, because what ends up happening is that you had a lot of people coming into the year super short. You had a lot of investors. You still have a lot of investors underinvested, right? So as terrible as that might be for them, that's not our problem. The way we take advantage of it is that that's additional fuel, right? Like that money hasn't even been put to work yet. Like we just seen the shorts unwinding. We haven't even seen the cash off the sidelines being put to work. So, it's our job to exploit that as best we can. And knowing that they're feeling the pain, that pain is profits for the longs, right? Those who took the time to actually pay attention to what the market was doing instead of listening to fairy tales being written by journalists or economists or anything like that. Like if you took the time to actually see that stocks have been going up, now month 14, you're being rewarded handsomely. So I think the lesson is, moving forward for future cycles, I think focus less on the narrative. Don't worry about the storytelling, and focus on what the actual market is doing. If you think it's only 7 stocks going up, go count. Like, instead of just taking someone's word for it, like, go see for yourself if that's actually true or not. And you would have seen very quickly that it wasn't true at all. Quite the opposite. Breadth continued to expand. So let's talk about the second half of the year, Lindzon. Forget like tomorrow, forget right now. The second half of the year. The first half of the year was led by growth, was led by tech. We started to get rotation to small caps and industrials and other areas, energy, over the last couple of months. What does the second half look like? Do you think it will look like the first half, or is it going to be very different?
Yeah, I'm not good at the prediction. I'm waiting to see what you say.
I think it's going to be very different.
Yeah, for me, the second half is that I'm very, we spent a couple of years in our business not writing checks. So we like in the private market, the same as in the public market, have a lot of dry powder. Now that assumes our LPs make their capital calls, and it's exciting to feel like our LPs aren't panicked. So yes, the one fear in the private markets is, oh my goodness, and it happened in 2008, where if you made a capital call to a private equity person or a venture person made a capital call in 2008, the person on the other end of the line, your LP, said fuck off. So here we are in the second half, and this is important. I know it may not be important to public market investors, but there was a period there where you were like, I'm not going to call him. Like, the guy on the other line may not make the capital call. So I think we're, so everybody's in a little bit of a better mood. I think checks are getting written, but at the same time, like I said about student loans and like I said about the banks, there's still going to be fits and starts. Because of supply chain, because China, because the world's not as big as it was, and then the old, what I would call it, this recency bias that, young people had for 10 years, it was tech stocks, right? They haven't, they're still trading and speculating AMC and SPACs. They're still doing it. I see it on StockTwits. There's that recency bias. They're still chasing Snapchat because it may be.
They don't know any better. They right. weren't around in the 2000s or the 90s or the 80s or the 70s or the 60s, right?
So I think that recency bias will affect how this market moves. I think a lot of money, even that gets bullish, will get hammered, because it's like Snapchat. As soon as they report earnings, it gets beaten down again.
Who uses Snapchat? Do your kids? I know you own and operate 2 millennials. Do they use Snapchat?
Yeah, they don't tell you that, and they're happy about it because you're not on there, right, to do them. So they are. They're
still using it, both of them.
Yeah. The problem I have with some of these companies, the valuations are still huge. So the winners of Web 2.0, the Snaps, the Metas, even the X's, the Twitters, the Airbnbs, the Ubers, the true winners are much like the Amazons, and they'll have to execute into new businesses, but you can't catch them. The Coinbases, the Robinhoods, whether you like them or not, they've created this space where because of interest rates and because venture capitalists are moving on to AI and crypto, they're going to have like 10 years free, no competition, right? So unless Schwab moves downwards towards competing with Robinhood, they're going to leave Robinhood alone. So Robinhood's going to have this really amazing cushion where competitors can't get funded because no one wants to spend $8 billion to create a Robinhood competitor. So I think if you can pick the right Web 2.0 companies, it'll be interesting. What I don't know is how overvalued they still are. So I'm looking at that. We're looking at putting obviously more money to work in mixed media. So, Americans have done a great job Americans have an incredible amount of free time. So they've created pickleball. We're working on a par 3 golf course. They're much like they created snowboarding and all these bike things. So we think mixed media in the United States, niche media will continue to be, it's not sexy in the public markets, that will continue to be sexy. And then in the public markets, I listen to you. So it's like the industrials. I'm not a commodity person. So I would say industrials.
You're the one who's telling me about steel.
Yeah, well, I just saw it.
That's a commodity. I don't know if you heard. It's not it's not an AI thing.
Yeah, it's not an AI thing. But AI could be driving enough innovation around the world, including supply chain, that we're seeing this thing. You can't deny the price action in a lot of this stuff. And the price action in tech outside of, the top 15, 20 stocks is still herky-jerky. It's still like Spotify, it rallies, Netflix, it rallies, but like they'll get hit if they can't meet their numbers or if they can't show extreme growth. And so I think it's more of a trader's market in the second half. I don't think it's a trending market as much in the second half because I think the student loans and the banks aren't as good as people think. So I think it'll just be a little more herky-jerky. But I don't have a prediction.
The fun police is here, so we're going to get you out of here. But I'm with you. I think it's going to be an environment over the next 6 months for the back half of the year where there's going to be winners and losers. And what's wrong with that? Isn't that, we used to call that normal back in the day, Lindzon? No?
Yeah, but I will say, one of your readers asked, it's like, things are harder in my space. You don't have to kiss the founder's ass. No one ever really needed to kiss the founder's ass. There was this thing going on near the end of the bubble where like venture capitalists had this thing they were calling founders heroes. And, there's no such thing, if you're going to call a founder hero, a lot of them are villains as well. Founders are like you and me. We just see things that bug us. We beg other people for money. We build great products. We have some great ideas. And hopefully you can raise some capital. And capital goes from being expensive to being cheap. We just went through the most cheap period. So, of course, there were a lot of bad founders behaving badly. But now it's for people like us to like beg and build some great things. By the way, this product's cool, this Restream. Is this like a new off-the-shelf type of product?
It's been around for a while.
It's been around for a few years.
How's it working for you? How's it working for you?
There are others like it. It is mostly been very good. Mostly.
Yeah, it's good. OBS is better.
OBS is
good. OBS is good, but for
OBS is way better.
All right, Howard.
It's amazing what you can do versus like 7 years ago if you wanted to create this.
You're telling me, man. I used to have some streaming stuff.
StockTwits TV was way ahead of its time, Howard. Way ahead of its time.
You could create StockTwits TV now much easier.
Yep, yeah, for sure.
You should do it. Bring it back.
All right, keep going, guys.
Thanks a lot, Howard.
All right, thanks, Howard.
Bye.
All right. A wise man once said, JC, you either die a hero or you live long enough to see yourself become the villain. Maybe that's true of a lot of founders. Okay. Let's see what Kimmy's doing. Kimmy was busy yesterday. 1, 2, 3, 4, 5, 6, 7.
Yeah, Howard's been working on his kitchen remodel for quite some time now. He's having a hard time with it. 7
winning trades for Kimmy.
Booked
a couple of losers, which I want to ask you about because I think you learn more from the losers than you do from the winners. So let's see what's going on this morning. Hello.
Hello. What's going on, guys?
Give me another killer day. 1, 2, 3, 4, 5, 6, 7 winners, only 2 losers. Nvidia, Tech, TECK, Caterpillar, Snowflake, UPST, IWM, Oxy, all winners. Qualcomm and STLD struggled yesterday. And then today, looking at these earnings plays, Google and Microsoft on the radar. I like where your head is at. Are you looking to buy this dip in Microsoft, Kimmy?
I don't know. I always get worried about the day of earnings. Well, it was yesterday, and to see how they trade. So sometimes I shy away from it. I'll watch to see how. Odds are, a lot of times they love buying these stocks, but we'll see. Maybe they don't. Google, I was in during earnings. So I sold yesterday, which I didn't get to put in the note because it was after hours. So
Ooh.
Nice trades. You made a couple bucks
that
on
was,
one.
I don't like trade into earnings. I've had the stock since last week and it dipped on me. I did add before earnings. I said, you know what? It's like you give yourself amount of risk and say, okay, I'm willing to lose this much because it could drop 10, it could drop 20, and that's the risk I took. And I did add a little bit yesterday. I gave the room saying it could go to new high 129 or 130. And I said, ultimately it could hit 132.90. So I think one of the guys in the room said it. I saw it at 131. I didn't see it at 132, but one of the guys in the room said it did trade as high as 132, I think.
Nice trade, Kimmy. Not bad. Not bad. Not bad. I like it. What about the Fed this afternoon? How are you approaching today knowing that you got that heart attack this afternoon?
I know. Do you think you think one more raise and that's it for the year? What do you think?
I don't think about it at all.
I'm like you. I don't. Yes, Kimmy.
I'd say probably one more raise.
Yes,
I'd say one more raise today.
That's what the market says. So
I think after the first half hour of trading, I think the market's going to go in a lull and wait. I don't trade after the Fed. I stop in the morning. We'll see if anything comes to fruition. I'm looking at other names. Target got downgraded and watching to see how it holds in there. AI has a nice little flag going on. Maybe it pushes with Google. Not a lot. I'm not like saying, wow, I'm like, ready to come in here and start. Boeing had earnings today. We can see how that goes. We'll see. I think I'll take it easy more if I get one or two trades off, hopefully. That'd be nice.
You change your mind a lot. Kimmy,
I'm a woman.
You said it, not me. I didn't say nothing. I don't know anything. I don't know what you're talking about. My point is, you change your mind quite a bit, and in the market, you better, or you're screwed, right? So kudos to you. You're coming in talking about how you're not going to do much in the afternoon after the report.
No, I don't.
I got a funny feeling you will, though. I
don't trade after the Fed. I have like maybe a few times. I really don't trade after.
We'll check in with you tomorrow, and we'll see.
It is like a 99% chance I don't mess around after the Fed because then.
Oh, you're saying there's a chance? What's this 1 in a million talk?
Yeah, but doesn't he speak at 2:30? Then you got 2:30. Then you get the whips like this, and then 3:00. You don't even know. They always say the first move's the wrong move, but
it's the knee jerk to the knee jerk to the knee jerk.
Right.
That's the final one.
Me. I don't know which way up or down.
And then you get the end of the trade. You get the end of the day, and then tomorrow you're still going to get residual action as well.
Right. I guess he raises, but I don't think it's such a surprise. And then I don't know what the heck goes on. Am I supposed to know?
No, you're not supposed to know, and you don't pretend to like most people do.
Right. Yeah, I don't know.
Yeah, I don't know.
All right, guys, if you want to join Kimmy's room, click on the link in the chat or description, or scan the QR code on the screen. If you want to talk to someone about what exactly you get when you join Kimmy's room, I would definitely encourage you to you can email us or you can call us. I put the number on the screen right now, 323-421. Well, we have actually a few numbers, but 7991 is one. It's on the screen. Call us, talk to Mary. If you have any questions about Kimmy's room, she's there every single day, live trading through the open and through the morning as well. Kimmy, have a good one.
Have a good one. Bye, guys.
I'll get him, Kimmy.
All right. It's 9:24. We're going to have Netto join us in a couple of minutes. I did want to briefly talk about the gap, not a gap, the gap. This is a bit of a breaking news item we have here in the last few minutes from the Wall Street Journal. The Gap just poached an executive from Mattel. If you want to know how hot Mattel is,
So hot right now.
So hot right now. See what the Gap is doing pre-market. That's how hot Mattel is right now because the gap is up. What? It just spiked. I guess not that much on a percentage basis, but it on the 15-minute candle, it looks like a lot. It just spiked up on this headline, right? So that's why the gap just spiked, is because they just poached an executive to be their new CEO. I haven't been into Gap in a long time, JC. I don't know if you have either.
If you had to guess, what would you think?
I would bet the under.
Yeah.
Yeah.
I didn't even know Gap still had stores.
Yes.
Weren't they like beefing with Kanye or something like that?
I don't know.
I think they were. Didn't Kanye just want to create like a pile of clothes and have people like dig through the pile?
That sounds plausible.
Does that sound like Kanye West?
I believe you. I don't know if that's true, but I believe you.
I honestly don't know what to believe these days. I'm just here. I hear things, Spencer.
All right.
You see?
Let's do the hot corner real fast, and then because we got a couple of things to discuss there as well.
Hot corner. So hot right now.
Interesting day, huh?
Yeah. And then we do have another transaction that's not mentioned in the hot corner, but I wanted to mention it nonetheless. So let's start with this one. This is today's report. Symbotic, the SoftBank Vision Fund, which I thought they were still in the midst of raising another fund. I didn't realize they already had a fund. Whatever. Anyway, $500 million purchase of Symbotic. So
so number one, that's not nothing.
No.
SoftBank, their track record hasn't exactly been great, but that's not the point. Big purchase. Talk about mid-cap industrials. This just gets back to, construction, industrial, heavy machinery, Caterpillar, Honeywell. Like, this is in that world. SYM, SPAC, Spencer Israel, not a big fan of SPACs, but this one, on the other hand, this is not your father's SPAC. This is
apparently not.
This is a whole other thing. Above 40, that's the level. We're still below it, even with this news and the pre-market action, still below 40. If we could stick that landing and hold above 40, I like it for a 50% move higher towards 60, but I gotta see it holding the 40. It's still a little messy, but it's the right space. It's the right market cap. These are the types of names that I'm really interested in right now. These cyclical, value-oriented areas down the cap scale. These have my attention.
This is a warehouse automation company. That's what they do. So it's machinery, right? It's industrial in that sense, but it's like in typical SoftBank fashion, it's industrial growth, right? Because it's all about the automation. So
robotics and technology. Interesting. So it's like the tech part of industrials. Interesting.
Yeah. Cool. Yep. And then this was not in the hot corner today, but I wanted to bring it up nonetheless. Salesforce. We don't often talk about insider sells because there's infinite number of reasons why an executive will sell stock. But on days like this morning, it's interesting because you had 3 separate executives at Salesforce, including Mark Benioff, who's the chairman and the CEO, have filings yesterday. I guess 2 days ago. Or no, the filing was yesterday. The trade date was 2 days ago. Saying that they had sold stock. Benioff's was the big one. He sold $3.38 million worth of stock.
How much is this guy worth? Is that really even relevant? $3 million worth of stock? What's his net
I don't know. It's a lot to me. I did not win the Mega Millions drawing last night, so $3.38 million.
You really playing the lottery? Tell me you're not playing the lottery.
I have a rule. And the rule is when the lottery gets above $700 million, I will buy 1 ticket.
The lottery is a tax on the stupid, Spencer. The tax on the stupid.
It's one ticket costs $2, and that is the price that I pay for the right to dream about being a billionaire literally tomorrow.
That's what Barry Ritholtz has always said. He's like, the reason you do it is for that dopamine hit of what you're going to do with the money, and that's what you're paying for. So kudos to you for recognizing that you might be being taxed like a stupid.
Look, I don't play. It's not like I'm a degenerate here. When it's over $700 million, I buy a ticket.
I have a friend that won the lottery. He won $250 million. I was with him last week, and his wife is telling me the whole story because they split it with 2 other people. They get together twice a year. It's like this whole thing. They think it was like a religious, they think that it was like meant to be. They have like this like bond. It's like this whole thing. I actually know somebody. It's wild. But anyway, that's nor here nor there. I wanted to talk about quickly the big options transaction also taking place there. On AGNC. This is a REIT out of Bethesda, Maryland. There, Spencer. I'm really interested in these REITs. Nobody else is. So that kind of has my attention. So interesting options activity. And for the record, in case you were wondering about that $3 million that Mark Benioff just sold, his net worth is $8 billion. So that's like you over tipping like you did the other day. Like, no big deal.
That's right. That is a comparable. Yes, that's an apt comparison, no doubt.
Yeah.
All right, there's our opening bell, by the way. So we are open here.
It's probably stretching it a little bit because that $3 million he sold is probably even less to him than that tip that you left the other day.
We do have a handful of like serious pre-market, or I guess it's not pre-market now, but morning movers here. There's a stock, SIMO, Silicon Motion, is getting acquired or merging with another company. It's up 78%. PacWest, one of those no-name banks, JC, getting acquired, up 24% this morning.
Got acquired? Really? By who?
Yeah, well, I don't know if it's like an acquisition or like a merger, but it's PacWest and Bank of California. Yeah, it's an all-stock merger.
Another bank I didn't know existed, Bank of California.
So
I think we're just making up names now. Oh, the Bank of California.
It's an all-stock merger transaction.
Bank of New Jersey.
That's not a thing.
I bet you it is. I bet you that there's a Bank of New Jersey.
No, XPEV, Xpeng got a $700 million investment from Volkswagen. So that stock is up about 20% this morning. And JC, your favorite headline in the world, WW, the company formerly known as Weight Watchers, got upgraded to overweight at Morgan Stanley.
I love it when that happens. When they upgrade Weight Watchers to overweight, it gets me every time. Every time.
Yep. So those are your top gainers in the morning. There we go. Okay, let's bring on Netto here. We do have a Fed announcement at 2:00. Press conference, obviously, at 2:30. We think they're going to raise rates.
Before we bring on Netto, quick. You want to hear something funny?
Yeah.
Guess where the Bank of New Jersey is headquartered? Fort Lee, New Jersey. Fort Lee, the home of one Spencer Israel, lives in the same place that the Bank of New Jersey is headquartered in.
There is no bank. Oh, there is called a bank.
Bank of New Jersey, headquartered in Fort Lee, New Jersey, across the street from your house, bro.
Oh, that's weird. I never heard of that before. All right, today I learned. The more you know. All right. Yeah. So yeah, we have Fed today, and it's going to be interesting, I guess. And we unfortunately, JC and I don't have to know much about it because that's why we have Netto here to come tell us about it.
That's my dude.
I can't find my bumper. Whatever. We'll bring him on anyway. Netto, what's up, man? Good morning.
There he is.
Happy Wednesday from Sin City.
Dude, you look like you're in Vegas. You look like you just had a hell of a night in Vegas. Is what you look like.
You don't know, brother. You don't even know.
Now, the funny part is that he wasn't out all night, gambling and partying. He was up all night tearing up these Fed statements and whatnot. He is. You think we're nerds? Like he's takes things to a whole nother level. Talk to me, Netto. Why should we give a damn about this afternoon? What does it mean to us? What does it mean to investors? How should we be thinking through this and approaching this?
Sure. Great question, JC. So let's just talk about the time frame and when you want to mark your calendar. So the Fed decision itself, in terms of one of 8 decisions it makes every year, comes out at 2 p.m. Eastern time. So that's just the first thing we should all do is make sure that at 2 p.m. Eastern time, if you're not aware, that's probably, at 1:59 and 48 seconds, it's probably not the time to put on position in terms of liquidity and if a big shock might happen. So it's all but assured the Fed today is going to raise another 25 basis points. As we can recall back to the June meeting, they had basically passed despite a lot of pressure and people thinking that they should go ahead and hike rates. So today is that sort of make up obligatory hike. And the question becomes, and we'll pick it up from 2 aspects today. One, the statement, which comes out at 2 p.m. Eastern time. And the second, which is the press conference from Chairman Powell, at 2:30 p.m. So as traders today, we're going to watch the statement at 2 p.m. And the second thing, of course, is going to be the press conference where Powell he'll make, of course, an initial statement, and then he'll field questions from reporters. Now, the one thing to keep in mind is that there's 8 Fed meetings a year. 4 of those Fed meetings, March, June, September, and December, all have what's called the summary of economic projections. Today's meeting will not have the summary of economic projections. Instead, it will be the statement, and then will be the words of the Fed. And in those SEPs, or summary of economic projections, that's where the Fed, that's where the dot plot is, and then that gives some insight in terms of if the Fed may hike or not. Because people can look at the 2023 median Fed funds rate. That's not going to be up part of the fodder today for the press. But what will be part of the fodder is that there's a 50% chance right now, currently priced in, that the Fed will hike again by November after today. And so the commentary that Jerome Powell can give is going to be about that, they can either shade that more or less. I suspect the Fed's going to try and thread the needle and not guide the market one way or the other. And basically, Powell's looking to maintain optionality. And we should, if Powell has his way and the Fed has their way, we'll leave today with about the same pricing for a chance by a November hike.
So what do we do? So, okay, great. So we're not banks, right? So we don't care what the Fed funds rate is, right? Personally, as individual investors, it trickles into other things, of course. So how, as investors, what does this mean to us? Are we buying stocks? Are we selling them? Are we buying bonds? Are we selling them? Like, how do we approach this as investors?
Sure. Well, I'll answer. I'll give you a 2-for-1 special, that JC. I'll answer that question as both an investor and as a trader. Okay. So here's the deal. As investors, we like assessing what regimes are. Okay. And so the regime we have as an investor, if you're managing risk in your portfolios, is the Fed overly disruptive to what, is still a pretty whistling economy right now? All right. And the answer to that question is probably no. All right. The Fed is vigilant, but the reality is that inflation's out there. Now, we've seen it abate or ease a little bit in the last CPI, but the degree that sustains itself, some of those could just be seasonal factors. So as investors, we're just looking to make sure that Jerome Powell doesn't rock the boat. The Dow's up 12 straight days. Microsoft earnings last night were not, again, given how extended equities are, it's going to be, there's a lot of blue sky being priced into the equity markets in the last couple of weeks here. Okay. So as investors who presumably own stocks, we're looking to just, as long as the Fed isn't like, we're way behind the inflation curve today, we're going to be hiking more than once. We're going to have to, nothing overly disruptive like that or overly unpredictable. Remember, it's ambiguity that scares markets. If people know what the fear is, they can manage it. All right. And right now, the Fed is pretty transparent about, listen, we're not necessarily done, but we're on an every other meeting hike schedule. We're going to take and see, how long we have interest rate hikes that are still working their way through the economy. And in that regard, the Fed's not overly disruptive, but it's also not overly accommodative either, because also what we're going to pick up today is the Fed probably wants to keep rates here for some time. In other words, this cutting cycle, which was all but basically priced out in the last 6 weeks of the Fed funds curve, meaning the easing to the back end of this year or early next year, is still, that's something that people have to form into their calculus. And given the way the equities have moved, that's okay. So as investors, it's conducive. As traders, we're probably looking for an overreaction, JC. In other words, I don't expect too much to come from it today, but that doesn't mean we still, because of lack of liquidity, don't get big spikes or big sell downs. The S&P can spike 20, 25, 30 points on relatively nothing, or sell down 30 points, 35 points on relatively nothing.
Well, that's what I was thinking. Is that what the straddle's pricing in?
The straddle prices in the liquidity aspect, but the straddle's not saying there's going to be a whole lot today. Okay. And consequently, as of that, I think, again, but I know what to look for. And it's something that I'll obviously share with you after the event is, are there any actual surprises? Are there any material changes? And so if you just go in blindly and say, I'm just going to fade this move, that may work unless they actually make a material change. And now you're fading a move when there actually was something meaningful that took place. Okay. And so, the things that could be meaningful today are that they come out in terms of how they are addressing future rate hikes. And maybe they say, the language, they've changed the policy in the second paragraph about additional rate hikes may be appropriate. They've changed each of the last 3 meetings. So could they come out and change in a materially hawkish or dovish way today? That's something I'll be on the look for. And that's really the first place I'm going to be in the main place I'm going to be looking at. they may make some tweaks in the first paragraph about what the overall state of the economy is. And if they in there characterize the recent drop off in inflation from the CPI and they emphasize that could be a clue. But we're kind of splitting hairs here today. And I think given where the straddle's priced at, in the S&P, not much is going to happen.
Let me ask you this. I've been thinking a lot about commodities. When I'm looking at some of the sentiment, we're at washout levels in commodities. People have really just forgot about them completely again, right? We saw this a few years ago. We saw commodities rip. Everybody was all excited about commodities. Now they forgot again, right? Tech is back. Growth is back. Tech is back. I feel like, and you could speak to the actual details better than me, but from what my observation is that inflation, people are not worried about inflation anymore. Not an issue. Forget commodities. It's back to tech. But I'm seeing those tips inching higher relative to nominal yielding treasuries. I'm seeing crude oil inching higher. These bases in gold continue to develop. Base metals. You're seeing the energy stocks and base metal stocks dramatically outperforming the commodities themselves, like oil and copper. Like these oil stocks are still hanging in okay, despite crude oil futures getting cut in half. Copper's gotten destroyed. Some of these base metal stocks are hanging in just fine. What does the stock market know? So are we in for a major surprise in terms of inflation, where these commodities and commodity stocks get going again, and we're going to need a lot more hikes, and bonds are going to have another leg lower? Like, can you zoom out a little bit instead of just this afternoon? Zoom out a little bit. And am I close? Am I way off? Like, tell me what you think here.
So let me add to that if I can, JC. It's not just those stocks, and you're right about the chart base forming in gold. But let's also look at corn, wheat, and soybeans. Okay, yeah. Now those are weather markets right there that are being driven by that. So that's a factor. All right, but those guys are also punching up. We were on here a couple of weeks ago talking about the big grain report at the end of June, and then we also talked about the stocks report on July 10th or 11th, I think it was. And so you're not alone in seeing these things. Commodities are kind of are definitely making a name for themselves in commodity stocks as well. Inflation is here, and it feels like it's sticky. And I think the big shift the market's had in the last 2 months is that we're not going to be cutting anytime soon. Okay, and so the idea that the market is processed that we're not cutting anytime soon, and I suspect Powell today is going to reemphasize that's kind of their way of hiking, if you will, is not cutting is in their mind, allowing policies to stay not accommodative, but at least quasi-neutral, and so I think that the Fed, if the Fed's not getting in the way of the market, which I think you could definitely argue that now, then you can put them off as like they're not vigilantes, all right, and that's I think the big risk that they can undo equities, and as long as don't become vigilantes, stocks should continue this ascent higher.
Netto likes stocks. Maybe he's even looking at the trend. I don't know. I don't know.
Netto likes stocks, and correct me if I'm wrong, John, you're kind of like just downplaying today. It seems like every Fed meeting is the biggest meeting in history.
Right, because here's the difference. The people who tell you that every Fed meeting or every non-farm payroll is the most important of all time, they're in the business of getting viewers to watch their content. They're not in the business of making money. A big reason why Netto's different than all those yahoos is because Netto's just interested in making money. He doesn't care about any of that stuff. It's not... Are we going to be able to make money from this or not? The fact that you're downplaying this is really interesting. I'm curious to hear your thoughts after the fact. To Spencer's point, like you're kind of like, all right, we'll see. Maybe you come out this afternoon and be like, oh, wait a minute, there's something here. You could very well do that.
I could, but you don't know that unless you do the prep, unless you have the team. And by the way, I'm more interested in more than just making money, JC. It's also hanging out with Spencer and JC.
All right.
But that's second, though. That's second to making money.
It better be a far second. I'll tell you that much.
Guys, we are actually in the midst of launching a premium subscription offering, whatever you want to call it, where you're going to be able to get Netto's insights. You're going to be able to get his thoughts before a macro event like the Fed or CPI or anything, how he's going to trade it, and then his thoughts afterward, how he did trade it, and what he thinks of the numbers as they relate to the market, right? Not so much like how do they relate to the economy, but how the market's reacting to the numbers. This is a guy that has made a living trading economic data. If you want to get on that beta list, email us and just do me a solid. When you email us, and the email's on the screen now, just put like Netto or something related to John Netto or economic data or Fed, whatever. Put that in the subject line so I know what you're talking about. And then when we do launch the beta version of this, I'll get you on that list, and you can get you can basically get this, what John just said, but delivered straight to you every time there's a notable event that he's trading, right? Because JC and I don't really trade these events, but John does, right? So anyway, questions.
I combine Nettos with Kimmy's, and I'll trade that. I look at it on the equities. Let me ask you this one more question. Sorry. It seems to me like gold has just ignored the falling dollar for the most part, and is more interested in rising real rates.
Yeah.
And that's really putting pressure on gold. And it feels less about the dollar and more about the real rates. Can you just touch on that quick before you run?
It does. No, you're seeing this in gold. That's a great observation, JC, and I think it's spot on. And if I didn't think it was spot on, I'd let you know too.
I appreciate that. Yeah, I'm full of shit all the time, by the way. Maybe not this time.
This time it's quite perceptive and quite accurate. And for the moment, gold's sitting 6% off its highs. I mean, I don't think it's done. It's clearly not quite the same trend as if you look at 2 years and 1 year and all the so far futures, but it's definitely a material influence in it, which is different than in years past. And that's, I mean, there are episodic incidents where that's not the case. But anyway, to your point, no, listen, gold. There's a reason why gold is sitting, implied volatility on gold is sitting near record lows. Okay, because you have a case for gold to rally. Okay, because the Fed hiking cycle is overall should be.
And implied volatility, are you talking about like the near month contract, like at the money straddles?
Correct. Near month, 30-day out at the money contract is sitting near record lows. It's sitting near, or at least the lower 3 standard deviation aspect of that. If you track implied volatility, yeah. So that's a function of an interest rate hiking cycle that's quasi near the end, but also a perception that the Fed's also not going to be cutting anytime soon. And so if you don't believe the Fed's going to be cutting anytime soon, that takes a lot of gasoline out of the gold rally. But if you also think that the Fed is basically done hiking, it's hard to get too excited about much more downside, and that's the conundrum. And that's, if you look at gold on this chart, I mean, look at over the last 3 months, it's choppy, it's consolidated, there's these higher yields that are suppressing its ascent, but at the same time, it's not like it's gotten crushed, and so it's in this range. I think that's the narrative behind why gold is trading in the range that it is. But knowing the regime, now we combine that with the economic data, and if we understand the materiality or immateriality of the economic data on a event by event basis, that provides opportunities overlaying the fundamental narrative, which we just talked about, which is driving it for months, with these more episodic event releases. Combine that with good technicals, and you have a trading system.
All right, Netto, always a pleasure, man. Looking forward to seeing what you think of what happens today.
Absolutely.
I will be listening.
Awesome. Have a great day, guys. Always appreciate it.
And again, guys, to get on that beta list, send us an email, questions@stockmarketmedia.com. Email's on the screen. A few people already did that, actually. So we'll get you on the list. All right, 9:50. Let's look at the hot corner, not the hot corner, chart report real fast, and then we'll get to some other stuff. All right, there it is on the screen. Yes, there it is. Okay, let's scroll down. Chart of the day. A lot of charts in on the chart report yesterday about the Dow and about energy, right? So
I like the chart of the day itself. This is energy relative to the rest of the market, which looks a lot like energy relative to tech, to be perfectly honest. And these 2000 lows that he's pointing to, we've been talking about it. We've been looking at it. If you look at energy relative to tech, same story. if we hold these 2000 lows, I think energy outperforming is probably something as investors that we should probably get used to. So big level, great chart there. What stood out to you?
Just the sheer number of tweets there were about the Dow. Essentially, there was seems like half this report was about the Dow yesterday.
I like the Todd Sohn. By the way, we should have Todd Sohn on the show. Love Todd Sohn. Does great work. What he's talking about here is that narrowness in the market remains unfounded no matter the measure. People talking about weak breath are either terrible at math or simply have not gone in to do the work themselves. Neither one of those are any excuse whatsoever for losing money in the market.
Yep. So the bottom three lines there are the S&P, the NASDAQ, and the Russell 1000, all excluding, or no, sorry, S&P and NASDAQ excluding tech, and then the Russell equal weight, right? And just showing that they've been strong. Even if you take tech out of the equation, they've still been strong.
Yeah, take a look at Steel too here by Ian McMillan.
Yes.
Shout out Ian McMillan, friend of the show. Talking about steel. Look at that. Big base.
Looking good.
I was told buy the smiley faces, sell the frowny faces, Spencer.
Looks pretty smiley to me. All right, guys, the chart report is free, goes out every single day, highlighting all the best tweets from the world of FinTwit, or I guess we're calling it FinX. I don't know what we're calling it now. If you want to sign up for the chart report, use the link in the description of this video, or just scan the code on the screen right now. And then, like I said, it's free. It costs you nothing. It costs you maybe 15 seconds of your attention. 30 seconds of your attention per day is what it costs. But it's fantastic. We all read it every day. And so do many others, because it's great. So Pat does a great job with that. All right, 9:51 here. Gosh, what else was on my list? There was a bunch of other things here this morning. We covered most of the earnings that I wanted to hit. I mean, like, you can talk about like Coke or whatever. I don't think we want to talk about AT&T. Tilray, which is still $1 billion company. I couldn't believe it when I saw that. But Tilray,
24% from Tilray today.
Yeah.
Wow.
Hey, it's a $2 stock now. It was $1 stock yesterday. Today is $2. Good for them. Tonight we do have some big ones. We got Meta, we got Chipotle, we got eBay. Mattel. That's funny. ServiceNow is a big one. Lam Research, semiconductor. Tomorrow morning, MasterCard, McDonald's, Honeywell, Royal Caribbean. That should be interesting. I want to hear about what they say about demand. What else do we have? I think that's it for the tomorrow, the overnight. So we are in it now. We are in the thick of the earnings season, everyone. So
Teladoc up 17% this morning. Look at this.
Oh, then they were last night, or was it this one? I don't even know. Yeah, they were last night. Let's see what their numbers were. Okay, they're still losing money, so that's cool, I guess. Let's see.
Market doesn't care about making money.
They gave guidance. The guidance was not good. So, at least compared to estimates, their guidance was not good. They gave guidance for the quarter and for the entire year, both of which came in below estimates. So, not sure what we're looking at there, but yeah, the stock. I guess they're not going bankrupt tomorrow, so that's why the stock is up. Whatever. Today, what is it up today? Wow, $26. It's up to. Huh. All right, the more you know. Let's check on the chat for a second.
Let's hit the recess. Let's hit the recess. We've had enough of the markets today. Let's get into the good stuff.
The good stuff.
The good stuff.
Did you see my message in Slack about recess? We had a question. We had a recess specific question.
Wow. Which was what?
I guess I'll play the bumper first, and then we can talk about it.
A specific question.
Yep. The recess specific question was about Chateau Fibonacci.
Ooh, what was the question?
The question was, I'll read it to you. The person who emailed, I forget their name, but they can't seem to find it anywhere. Not the wine, I mean. Like, the site or anything.
It's a very DL. You got to be in the know. You got to be in the know. No, there's nothing to know. We're on our third vintage of Cabernet Sauvignon, single vineyard, Calistoga Cabernet Sauvignon, 100%, 100% single vintage. Also being aged right now in Yountville. So our 2021 harvest was about 4.6 tons. It's going to make about 230, 240 cases. And it's been aging for about 18 months. I was actually drinking it last week, straight from I get a bottle sent to me about once a quarter, and it tastes way better than I could have ever imagined. And it's nowhere near being done. Probably going to age it in barrel another 6 to 12 months, and it's got another 6 to 9 months in bottle, but it's already tasting good, tasting like fabulous, as a matter of fact, like surprisingly good. And then the 22 vintage has only been in barrel for about 6 months. Not tasting anywhere near as good as that one. Granted, it's way further away from being done, so it shouldn't taste as good. So that also makes sense. But tasting pretty good, I'm not going to lie. So we are now, Bud Break was a few months ago for 2023 vintage. And it is now July the 26th. Wow, I can't believe it's already July 26th. So the grapes have been going through what is referred to as veraison there, Spencer Israel, where the grapes turn from green to purple, right? It's called veraison, and that's been taking place. And harvest, depending on how hot August is. Last year, August was ridiculous. So we might be harvesting in September, maybe late September, maybe early October. It's different every year, but it's been really hot lately. So harvests have been earlier than later usually. So probably in September, which could be, right, or first couple of weeks of football season.
Put it this way. When there is Chateau Fib to be sold or drank, you will hear it from us. You will hear it not from me. You'll hear it from JC. Right?
Also, for the record, All-Star Charge Premium members get first dibs. So
there we go.
You got to take care. You got to take care of your people. So
yes, Mark Sebastian, that is correct. Okay.
No, it's not a free bottle. These are $200 bottles of wine. I'm not just going to be giving them away. Nice try there, Mark. Nice try. But when we do we're going to do a Charge Summit in Napa next summer, maybe next spring, early next summer, maybe May, maybe June. So just keep that in mind, and you'll be able to taste it then. So, all
right. What else did you have in mind for recess? I don't really got anything other than the fact that, I don't know.
Well, I was thinking about what we're going to talk about in recess, and I got totally
I'm sorry,
shaken out with the Chateau Fibonacci. So we might just have to leave it there. But kind of just generally speaking, we're finishing up. We're finishing up July. August is here. It's right around the corner. When you talk about the dull days of summers, when you talk about, low volatility action, from that tends to come a lot of opportunities. So we're going to be talking about that as August progresses, where there's certain trends that kind of have just exhausted themselves. Downtrends continue to continue down into the end of August and then turn around hard after Labor Day. Uptrends tend to continue higher, kind of melt up, and then after Labor Day, then just get hammered. So what we're looking for trends to kind of continue a bit too far into the end of August, and then we come in after Labor Day for the real move once the big boys come in. So it's a little early for that conversation right now, but kind of just a heads up as to what we're looking for.
All right. My recess is last night I booked my ticket to see Oppenheimer on Friday. And on the way there, I am going to do some due diligence, some boots on the ground channel checks. I'm going to eat at Kava. I've never been there, but this Kava stock has been on fire. It's hit a new all-time high. I'm sorry, not an all-time high yesterday, but all-time high was made last week. 2 weeks ago now, on July 10th.
2 days ago. 2 days ago.
I'm seeing
today is Wednesday. On Monday, close at an all-time high.
All-time closing high, correct? Yes.
It's the most important price. Is it not?
Okay. Yeah, yes, it is. So all-time closing high. So there you go. The stock is on fire. I'm going to check it out. See if it's actually.
I heard it's pretty good.
Investing heavy. Is this simulcast on TikTok? TikTok doesn't do live streaming, so no,
dude. Quick, you know what I'm doing tomorrow? So I'm starting the day here with you. Then I'm going and taking a car into the city, having lunch with Tom Lee, doing omakase down in the village with Tom Lee. And then going Josh Brown and Michael Batnick. They have a YouTube channel called The Compound and Friends, and we're gonna rip through some charts. Then we're gonna go to dinner. So I got a nice little Thursday lined up tomorrow.
That sounds great. On that note, I did look up some omakase yesterday. There is a place near me that does that, so I'm going to be looking into that here in the near future.
Get involved, Spencer. Get some culture, as they said in the chat. Come on.
Get some culture. JC, what's the signed picture in the background?
That's Mike Tyson. You know, everybody's got a plan until they get punched in the mouth.
That's it. All right, guys, stay tuned on the channel. We have What the Fick coming up at 11:30 with Ian Cully and myself. JC and I are doing the hot corner today for hopefully the last time. Next week, Strazza, we hope, will be back in the States. So that'll be at 1 o'clock today. That's it for us. Thank you to our guests, Howard Lindzon, Kimmy, Sokoloff, and John Netto. Thanks to all of you in the chat. Once again, any questions, comments, concerns, otherwise, please feel free to reach out to us. You can email us questions at stockmarketmedia.com. You can always call us with any feedback. Talk to Mary, 323-421-7910. That's a wrap. Everyone have a good rest of your day. Go make some money. We'll see you guys on What the Fick, all right? Have a good one.
Run it.